Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today is Friday and 8th of July. We will continue to track the euro currency. Well, today is a very important day because today we will see the non-farm payrolls release, and due to previously has been released yesterday's the ADP data, we could expect that the non-farm payrolls also could be positive. But taking into account the previous price action when the market has shown real some plunge to the 142 area as we expected and then return right back, it tells me that probably the unemployment and the non-farm payrolls are not the major indicators that will be tracked by the market in today's trading session. Although they are significant and important for the very short-term intraday price action, in general the major importance for the market now linked with the debt selling on the US Treasuries, and this problem should be resolved not later than to the 2nd of August. This adds some nervous to the market and reduce the strength of the dollar. That's why even payrolls could be nice and strong. This could lead only to the short-term reaction, the dollar strength. This is the major risk for today. And the technical price action and technical analysis also relatively confirms this warnings and suspicions about that. Let's start from the daily time frame. What we see here, as we said yesterday, the MACD predictor indicator. This is the Judd-Napoli MACD indicator, MACD predictor. It shows the trend. When the market stands above, trend is bullish. When the market stands below it, trend is bearish. And we said that as MACD predictor comes and play very close to the price action, it could show the stop grabber pattern. So that has happened. You can see that this is the bullish stop grabber pattern. What the major points? Why there's a big deal about that? Well, take a look. For instance, those people who enter on the short side of the market, and those who trade on MACD indicator, they see in the beginning of the trading session, and when that market has shown really plunge to the downside, they enter on the short side. I suppose that this has happened during the ADP numbers released. Dollar become a bit stronger, so they have seen that trend has turned bearish and enter on the short side of the market, where they place their stops somewhere above the market. I suppose maybe above that highs. Okay, but later on the trading session, market has returned back and unconfirmed trend shifting to the bearish. So those people who entering on the short side of the market due to the signal on the bear trend has been trapped in their wrong positions. And very often the target of the stop grabber pattern is the previous highs, at least the previous highs. So this stop grabber could lead to the taking out of that highs around 145.50. Okay, if this will happen, then probably this just to confirm the further bullish development of the situation on the euro currency, because as I said in the beginning of the week on the weekly research, that the price action on the monthly and on the weekly time frame tells me that probably a market is more bullish than it seems on the first view, because this price action that was the couple weeks ago doesn't tell that this is really the normal bearish price action. That's not the case, because this market should not act like that if it's really bearish. So that's why I think that this could be the early signal that probably market will continue to move to the upside. We'll see. But currently, definitely, I will not, and I do not want to enter on the short side of the market, because you can see the stop grabber pattern. You can see absolutely normal price action when after ABCD pattern, when the CD leg extended. It's 127 extension from the AB move. Market has shown 618 retracement, reached the weekly pivot support 1 and returns right back. This is not the reversal. This is just some retracement of the standard ABCD pattern, and as a result, market could continue move to the 1618 extension target. Stands around 146, somewhere right here, just above these highs. Okay, so that is correspond with the possibility due to this stop grabber pattern, and the case that market just has stopped right at the weekly pivot support 1 and then returns back tells me that this is just a normal price action on the bull trend. When the market retraces, it usually retraces to the weekly pivot support 1 and then returns right back. So current situation on the daily time frame worries me, and I do not want to short in this environment. Well, maybe I even prefer to enter long, because I could place the stop very tight. The one thing that I just that caution me is the doom and gloom during the release of non-farm payrolls. That's why I do not like to trade during the important micro day-to-day days. I prefer to stay flat during particularly during the time of the release. But in general, I preferably enter on the long side of the market than that will short in this environment. Okay, so that's my current view on this particular situation. The way when we can return to discussion of the short position and the return to discussion of the bearish buys, if market will returns right back, take out the lows of that stop grabber pattern and totally erased it, and will continue move to the downside, move below the weekly pivot support 1, below the 142 area. In that case, probably we could return and said, yes, that probably not the just retracement after this leg, because market has broken down 618 support, it moved below the weekly pivot point, it erased stop grabber, bullish stop grabber pattern, and so on. But currently, I don't want to short, I don't want to sell in that current environment. I probably will try to enter long due to this pattern, the stop grabber, because we have bull trend on the daily time frame and bullish dynamic pressure on the weekly environment. Okay, so our context for the trading, I suppose, still bullish. Well, how usually market develops the situation when it shows some kind of stop grabbers in that after retracement? Usually it forms some look-alike stop grabbers for some time. This could be just small stop grabber. For instance, currently market shows some trading shift to the bearish, but it closed somewhere above it. Then again, some small candle and the market just will be creeping with the red line with this MACD predictor, and then it will accelerate to the upside. This is very common. This very often happens. Okay, something like that, but in different direction. Okay, but this was not particularly the same situation, but something like that. So it will be a creep a bit high under the small candles and then accelerate to the upside. So as a result, that said, the current environment makes me think that this is not time to enter short. We need some more confidence, more confirmation of the erasing of the stop grabber and breaking down of this fib support to tell that probably this is not just a retracement and market will continue to the downside. On the 4-hour chart, what do we see? Market almost has hit our target discussed yesterday. But here we said that since market accelerates right to 100%, we should wait for the acceleration to 1618 to the 142 target of the weekly pivot support 1. That has happened. You can see that 4-hour trend also has turned bullish. This is, by the way, excellent piercing of the MACD lines, very strong signal. You can see this angle is really nice. This strong candle to the upside could tell us that probably the shifting in the momentum has taken place, because you can see really plunge candles to the downside. Okay, strong candles. Now you can see the fast candle to the upside. This usually happens when the momentum on the market shifting. Okay, and you can see that this candle is greater than the previous swing down. So this this in general the bullish pattern, in general bullish price action. How long this bullish environment will take place? Who knows? Maybe it will be just short-term market show some deep retracement, or maybe we will see the long-term continuation of this move, that is will be on the in weekly, on the monthly time frame. Who knows? But in general, this price action do not let me to enter short on current market. So as a result, on the hourly time frame, we see that recent swing up. What we could get here, this could be some kind of head and shoulders reversal pattern. The major Importance for us currently is area of 142.50 area, because you can see that previous lows. Okay, this somewhere above the 50% of that strong upside bar. This price action is rather flat, so it tells that probably some bullish power currently in the market. But since this is the first thrust to the upside, usually the retracement deep after the first initial thrust in the other direction. That tells me that probably we could use and try to enter on long side of the market from that area, because you can see that the head, if you measure from this low to that high, almost stands around the 1618 extension of that swing. This is very typical for the head and shoulders patterns. Okay, this is not very perfect head and shoulders, but in general it could be. So entering from that area will allow you to place rather tight stop somewhere below the 88 support from this low to that high, or even below the low. If market will raise this thrusting bar to the upside, then probably our assumption about the further continuation to the upside will be wrong. But this will be really tight stops, about 30 pips if you are placed just below 88, or 50-60 pips if you are placed just below the low. Okay, so that's absolutely normal. This could allow you to enter with the tight stop with the reasonable level around 142.50, the 618 support from that swing to the upside, due to some bullish patterns that we have discussed on the 4-hour time frame and on the daily time frame. But be careful of the particular time of the release of non-farm payrolls, because you just could be stopped out occasionally due to the doom and gloom price action volatility. So be careful with that. That's all. That's my current view on the situation. I think that the market is more bullish than bearish, and personally I do not want to sell in current environment. I prefer more to enter on the long side of the market, especially if we take into account that we could enter with the very tight stops. So if we even will be wrong, we do not lose much. But in current environment, personally I don't want to enter short.